Hey everyone, how you guys doing? Hope you folks are having a great weekend out there. Appreciate you being here with me again. If you can, please let me know how the audio is coming in, making sure that these audio levels are okay for you. And I'll be with you folks in just a minute or two. Again, appreciate you all being here. Hope you all had the chance to watch the Steve St. Angelo interview. He gave some pretty good info out there, once again, as well as Tavi Costa the week before. Oh, excuse me. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly live stream where we just try to tiptoe around whatever's going on, topic of the day, news, things like that. But I'm glad you all could be here, and there are some pretty important things that we will talk about. So just want to say aloha to you all, and again, thanks for being here. Kokang, how you doing? First time I've seen you here. Welcome aboard. If you are new here, or your first time, go ahead and type in new and where you're from, and we'll see if we can go ahead and acknowledge you. And okay, MM126, welcome aboard. First time I've seen your name as well. Let's see who else. George Shabor. Sorry, I'm mispronouncing your name there. Welcome aboard. Let's see. James Richter, how you doing? One of the stalwarts. Jack P, Fat Vegan, how you doing? Peter Frowine, I think it's the first time I've seen your name as well. Welcome aboard. So a few new guys. Appreciate you being here. Um, Again, input is always good. Jack P, Martin Rev, Mr. Nguyen. Uh, let's see who else. Newton Rev, of course. Jay, Pablo Pina, Frank Valentic, Patrick Bateman. Glad you all could be here. Let me see what's out there on your minds, your comments anyway. Let's see. Um, yeah, there's still some talk about LBMA. That's for sure. I mean, only time will tell. Only time will tell when it comes to that. So just want to say a big hello to everyone. Welcome aboard and aloha. Thanks for being here. Seymour Rivers, how you doing? Pabar, how you doing, Pabar? Again, Patrick Bateman, Emperor Bear, Dave Hilderman, how you doing? New Mexico Stacker. All right, welcome aboard, New Mexico. New Mexico, New Mexico. That would be Lobos. Generally speaking, New Mexico Lobos. How you doing? Let's see, Justin Miller. Justin Miller, absolutely. You can trust them to screw it up. And I promise you, something interesting is going to come at the end of the at this program where I had a interview with a former Fed insider, and she's going to say something pretty interesting about Janet Yellen and about Jay Powell. So we'll get to that point and we'll see what she had to say. So again, James Richter, how you doing? Let's see what else is out there. Um, Man City, first time I've seen you here. Also, welcome aboard over in Australia. Hope things with the Perth Mint are going well for you, or hope things in Australia are going okay. Carrie Ellen Welder, how you doing? And let's just get to okay down here. Alejandro, how you doing, sir? Appreciate it. Appreciate the super chats. Appreciate the thumbs up. Appreciate any support we can get. It really means a lot to us. What's up, Patrick? Hello from Guadalajara, Jalisco, Mexico. Huh. Okay, let me see if I can remember my Spanish for you. It would be Buenos noches. I hope things out there are going well for you. And again, thank you for the super chat. Really do appreciate it. Really do appreciate it. Only been to Mexico once. That was on the border town of Laredo, Mexico and Texas. Been there once. Been there once. Okay, and okay. With that, I think we got a good pretty decent crowd going on. Appreciate again all of you being here. A lot of new names. So with that, we will, as always, if you are new, please do subscribe. Hit the bell to be updated on new content. And again, give us a thumbs up. Thumbs ups really do mean a lot. And you can always find us on social media. Silverbullion.com.sg is our website where, yes, we do sell silver and gold, but more than that, we do specialize in wealth protection, systemic wealth protection. I think most of us here truly do know what's going on, and systemic wealth protection is something that we all need to have an option to be able to get into. It is a very, very important thing. Silver Bullion SG is our Facebook handle. Silver Bullion PL is where you can find us on Twitter. PL for private limited. Audio versions bit.ly bit.ly/SBTV iTunes or SBTV Spotify for the audio versions, and Crisis Tracker. This is a group that we do have on Telegram. So if you have that Telegram app, it's a free app for your mobile phone, excuse me, or maybe even for your desktop. Do go ahead and join it. And Vincent and I, mostly Vincent, he puts out some really good articles out there, some pretty thought-provoking articles that he finds from across the web. And I tell you what, it's all good stuff. Very important things as it pertains to gold, silver, as it pertains to financial news, economic news. So yeah, I do hope you join that Crisis Tracker group. Upcoming guest is going to be a first-time guest. I think many of you guys are familiar with his work. He is David Hunter, Chief Macro Strategist at Contrarian Macro Advisors. Oh, excuse me, as well as the author of the Contrarian Value Advisor Letter. Now, prior to that, David was a former CIO and fund manager with over 40 years experience in investment and portfolio management, having been a fund manager and analyst on Wall Street, handling everything from macros to pensions. So David Hunter, he'll be our upcoming guest, and I do hope you can join us for this interview. Going to be interesting to talk to him. It'll be my first time also to give a go with David Hunter. And our ebook thank you giveaway. As you know, we give away ebooks every week, and usually the questions will come from an interview from the prior week. So hope you had a chance to watch the Steve St. Angelo interview, because this is where it'll come from. The book that we're going to be giving away, When Money Destroys Nations. I think, this is an important time in history, when money destroys nations, because it's something that we are seeing right now. Money is really destroying nations, and you could even say it's destroying the citizens that live in that nation. For better or for worse, money is doing incredible things to them. So, how hyperinflation ruined Zimbabwe, how ordinary people survive, and warnings for nations that print money. The collapse of the Zimbabwe dollar in 2009 after years of rampant money printing is a frightening example of what lies in store for countries that resort to printing money to pay national debts, bail out banks and oligarchs, and enrich the political elites. So, just from the title, it does seem like it's a pretty good book. So, if you want this book, hope you watched that Steve St. Angelo interview last week, and some rules to win this ebook on Kindle. Download that Kindle app from your phone or tablet's app store. We're going to take the first 5 people who get it correct. And again, this app is a free app, no charge there. U.S. winners are going to be given a link to download the ebook. Winners outside the U.S., we're going to have to arrange for an alternative prize, because Kindle does not allow for gifting of ebooks outside of the U.S. And you are going to have to send us your email. So what we'll do is we'll mute your comments. My colleague Vincent, faithful Vincent, he's here standing by, and and he will mute your comments, and that way you can go ahead and send us your email. And it has to be during this live stream. You can send us your email. It will be muted. Only we will see it. So that way, no worries. You won't be getting all types of spam email afterwards. So having said that, I'm going to give you the question. It does come from the Steve St. Angelo interview. Looks to be a good book. So go ahead and just give it your best guess. Give it your best shot. The question, according to Steve St. Angelo, Michael Saylor, Elon Musk, when they talk about Bitcoin, they might also believe in an energy blank. Now, it may be two words, it may be one word, depending on how you spell it, but they believe in an energy blank when it comes to energy. So just go ahead and take a guess. You never know. Okay. According to Steve St. Angelo, Michael Saylor, and Elon Musk, when they talk about Bitcoin, they might also believe in an energy blank. Go ahead and take your best guess. Chris Primer, how you doing? I hope that ebook thing got settled with you. Okay, so Chris Primer with Glut, Jack P with Tooth Fairy, Martin Rev, Tooth Fairy. Let's see, Fat Vegan on. Okay, MM126, Waste, Norseman Ecosystem, Fat Vegan Shortage, Always Be Funding, Fairy, Patrick Bateman, Tooth Fairy, Manuel de Jesus, Failure. I like that answer. Failure. Silver Warrior. Warrior Tooth Fairy. Okay, let me see here. Okay, hang on. Let me see one. Okay, you know what? We have our five. We have our five winners already, and it's going to be the real answer is Tooth Fairy. So it's going to be Jack P, Martin Rev. There we go. Tooth Fairy. Jack P, Martin Rev, Always Be Funding, Patrick Bateman, and Silver Warrior. So the answer there is Tooth Fairy. Secondary, we're going to we're just going to include a few more names just in case some people would like to pass on the book. So I'll include two more names just in case, and that'll be James Richter and Manuel de Jesus. So just in case somebody wants to pass on the book, we'll include Manuel de Jesus and James Richter. But five winners, again, are going to be Jack P, Martin Rev, Always Be Funding, Patrick Bateman, and Silver Warrior. Congratulations to you guys. It looks like it's going to be a good book. I haven't had a chance to read it. Let me know how it is. So anyway, just to confirm, here is Steve St. Angelo with his Energy Tooth Fairy answer.
The infamous Mike Saylor. He's the CEO of MicroStrategy, and he's a big Bitcoin guy, right? And so he says that the 21st century is now going to be the dominant store of value is going to be digital. Well, I can tell you that digital takes a massive amount of energy to run that system. And so these guys can talk about this high-tech Jetsons future. We're going to have Elon Musk is going to send people up in space. But because they don't understand the massive energy it takes to do all this stuff. So they really believe in an energy tooth fairy. And so if you understood the energy, you would not want to be in Bitcoin.
Okay, first of all, I'm really surprised you guys got it. Energy Tooth Fairy. That was such a small segment of the interview, but you guys nailed it. I'm impressed, and I thank you for watching that interview. So according to Steve, Bitcoin, excuse me, yes, takes a huge amount of energy when used for transactions. So they say, and I got to tell you, immediately we did get a lot of comments, in defense of Bitcoin, saying no, it doesn't take energy. You folks are outdated. You folks are wrong. But we'll see as things start to unfold because we did see that comment from Elon Musk saying he was having second thoughts about Bitcoin, right? Because of the energy values or the amounts of energy that it uses. So I think it's going to be pretty interesting to see what happens moving forward with that. But I'm no expert in this. I will say it straight up. But you do have to ask if a person's narrative is all about stopping climate change, then how could that same person promote Bitcoin unless you think that it doesn't, as much energy as people are saying it does. So that was an interesting point that Steve St. Angelo made. So let me check here with the books. Let's see, Jack P, Martin Rev, Always Be Funding, Patrick Bateman, Civil War. Congrats. Yes, exactly. Please put your email in chat if you want to receive the book. I would. Seems like a pretty interesting book out there. So again, Vincent, thank you for compiling the names and getting that squared away. So again, interesting what Steve San Angelo had to say about Bitcoin, and he is all about the energy cliff, peak oil, things like that. And he does make a point that sometimes we just seem to not hear enough, or sometimes don't quite understand fully. So kudos to Steve. It's another clip from Steve San Angelo.
It was always about the energy. The energy makes the metal, which the Bronze Age was allowed the civilization to prosper. And then when they hit peak wood or peak energy return on investment at wood, the whole thing started to fall apart. It's the same thing with the ancient Roman Empire. And guess what, Patrick? It's the same thing we're facing today. But instead of being wood, it's coal, oil, and natural gas. Those are the big three.
Yeah. So Steve, excuse me again, he makes a great comparison. I'm just curious your opinions out there. Have we hit peak oil? Many folks think we've hit peak oil. What will it mean as oil gets more expensive to pump out of the ground? What's going to happen then as it gets more expensive to pump out? And if we were to see higher oil prices, everything across the board will rise. Keep an eye. Oil is an indicator of the economy. Oil goes into so many things that are made, including pharmaceuticals. I think 80%, somewhere around there. It's a high number, and it just almost in all of our everyday things, oil is in it. So if oil should rise, you're definitely going to see an increase in just our everyday items. And I know, CPI numbers and all of those things came out, and we did see it go up. And Fed is still pretty calm about it, which is why we're going to be looking at the Fed later, seeing if we can really trust exactly what they're saying or the picture that they're trying to paint for us. But Steve San Angelo, have we hit peak oil? It's a great question that yes needs to be answered out there. Fat vegan. Let me see. Let me pull up your comment here. Yes, peak oil, peak gold, and peak silver have all been hit. I've heard this before as well. There are people who are saying that we have hit peak in all of these things. So it's a great comment there. I'll go into one more clip with Steve St. Angelo.
I looked at the World Gold Council's numbers for the last 2 years. The World Gold Council, 2019 to 20, 42 million ounce gold surplus, even after central bank buying, even after ETF demand. Well, if you do the same accounting for the silver, it was 311 million ounce deficit. 300. And so even though the price of silver is not showing that, I think people are more and more people are waking up, and these fundamentals are going to kick in, like we're seeing with lumber, but on a more long-term basis.
Yeah, so Steve, he brings a lot to the plate, and he actually was our first guest here on SBTV, so we always have a special place for Steve. I think a lot of us do. He says things that we like to hear. He says things that maybe we don't like to hear, but you're going to get the truth from Steve St. Angelo, something we always appreciate from him. So are we in a silver deficit? I mean, you have conflicting reports. Is deficit being hidden? If you have conflicting reports, then obviously someone would possibly be hiding a deficit, right? And if so, why? Why are we just seemingly not being told the truth, or seemingly, uh, we just don't get the full story. We really just do not get the full story. So, Steve St. Angelo, great interview with him. And I just want to go through a few more of your comments here. Um, let's see. Jane Grizz, first time I've seen you here. Welcome aboard. Oil may be replenished in the earth, but they wouldn't want us to know that. Interesting take. I can tell you, since I was a kid, decades and decades and decades and decades ago, we were told oil would run out in 20 years or things like that, and we need to get away from fossil fuels. It's always been the narrative ever since I've been alive, at least. So if it's been alive, I mean, the narrative since I was alive, chances are it's been the narrative since you were alive too. So it's pretty interesting. Why would they always be telling us this year after year after year. So anyway, I do hope you enjoyed that Steve St. Angelo interview, and we're going to be headed over to our website in just a bit. But I just want to take a look at a few more of the comments here. Um, let's see. Yeah, exactly. American Rebel 27 been hearing experts say peak oil since the 80s. That is true. Um, I can go back and tell you even the 70s. I remember it back in the 70s. So kind of dating myself out there, but again, yeah, they've been telling us this forever pretty much. So, kind of curious why. Anyway, let's head over to our website, silverbullion.com.sg. Take a look at the gold and silver price as well as nickel. And again, our 15,000 ton capacity silver vault upcoming. I do believe it's going to be the biggest vault in the world. Cryptocurrencies, you can use them. CGT, Cash Gold Token, Bitcoin, Bitcoin Cash, Ethereum, or Litecoin can all be used. If you want to use them for payment, you can find it in the currency section. So wherever you see the flag, you can go ahead and click that and scroll down and you will see them as a currency. So if you were trying to use it and you couldn't find it, it's located in the currency section and you can see them here. CGT, again, Cash Gold Token, Bitcoin, Bitcoin Cash, Ethereum, Litecoin. Just go ahead and click on those and the prices will be adjusted to that particular cryptocurrency. Looking at gold and silver in US dollars, we see silver in Asia early morning 27.66, so still continuing to hold that $27 level. Good for silver. Gold 18.49, still about that 18.50 level. Good. It's a key. That is a key price point for gold, and I'm going to ask an upcoming Metal Money guest about this. Gary Wagner, who is over in Hawaii. I want to ask him about this $18.50 price point for gold. It is an important price point. Nickel, 17,438 a ton. Been up and down lately, but nickel still overall is a key component for electric vehicle batteries, and it is going to be in incredible demand. A lot of people are jumping in on the nickel ship right now, so keep an eye on this. Investor Kit is free to download. You can either look at it on our website or you can download it, keep it on your computer. Star Storage signups are free. Once again, it is something that you want to do and you want to have ready to go. There is no maintenance fee on it. But again, you just never know when that time comes because we always talk about opportunities where for some of us, our situation does tell us that we may need to store silver and gold in overseas, someplace overseas and in a good jurisdiction, a favorable jurisdiction like Singapore. Again, this may not be for everyone, but it is pretty important that you have this ready to go. And do consider your 401ks because it's money already there that you have that you can use to put into a precious metals IRA. Silver to gold ratio is 66.9, so still holding at about 67 from last week, still about there. It means basically 67 ounces of silver will equal 1 ounce of gold price-wise. So just take gold, price of gold divided by the price of silver, and this would be the number you would get. Okay, so that's according to silver gold ratio 66.9 or 67 ounces of silver to equal 1 ounce of gold. Featured products, again, 1,000 ounce LBMA bars. This seems to be a hot topic. Just go anywhere on Twitter. You're going to see guys talking about these 1,000 ounce LBMA bars. It seems that it's getting hard to get in the States, but we have them here in Singapore. So if you would like to get them and vault it with us, you own it. It is yours, and we will vault it for you. 1 ounce Canadian maple leafs, always a popular item. But taking a look at these, of course, nickel also, we have a 2-ton bag, and we also sell in 250 kilogram drums. But when it comes to nickel, or excuse me, the LBMA bars, 248 bars in stock. I believe it was just over 300 not that long ago. So these bars, once again, they're on the move. I'm surprised. These bars are definitely on the move. In the shop, sometimes what we will do is we will take from the vault and move it to the shop to let people go ahead and take it home if they want to. But again, when you buy it with us, it is yours. So even if you go ahead and you buy it to store in the vault, you own it. There's no question to it. You definitely own it. And to do all this, you will need to sign up sign up for an account, sign up as a silver bullion user. It's very easy to do. Once you're on the website, just click sign up, and you have six different choices: personal account, joint account, trust account, joint account with the minor, a business account for those of you with businesses, and of course, retirement account if you're looking at a precious metals IRA. It's very simple to do. For instance, as a personal account, all you would need is your ID, passport, let's say, and just fill out an application, and we'll go ahead and get you started with that. Very simple to do. And when you come down to references, do go ahead and check off YouTube SBTV. That helps us out a lot. You can have newsletters. Vincent does a great job with newsletters, and Stephen T is also helping out Vincent with that. So these are pretty good, and you definitely want to check this box here. Receive customer notifications via encrypted secure notification. What that means is if we need to contact you, you'll get an email from us, and all it will say is you have a notification from us. We don't put anything in the body of the email. That way, Google, Yahoo, any of those guys, if they do have some prying eyes, they're not going to be able to see anything with that or your communications. So again, privacy, 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 systemic wealth protection. It's what we are all about. Let's go ahead and move over to Twitter, see what's going on in the Twitter sphere. Okay. If you have ever been to the vault and you've met TJ, this is his beautiful hand, which I think we're going to have to insure by Lloyd's of London now that it's become famous. So, TJ, famous hands, we're going to have to get that insured for you. Anyway, this came out from mainstream media, from CNBC. So, getting some love from mainstream media. This was just last week, May 13th. So, silver is up over 70% in a year. Here's why experts say it could have further to go. So unusual to get some love from mainstream media. It's often overlooked in favor of its lustrous cousin gold, but the price of silver has jumped over 70% in the last year. And this is why we've seen, if you guys actually played that silver to gold ratio, you may have bought silver when the ratio was at about 120, 125, and you've basically doubled up right now if you were to flip some of that silver into gold. So you actually did something pretty special if you played that ratio and got it right. Leading commodity strategists saying the rally is likely to continue as the global economy reopens. And this is key here: as the global economy reopens. We're going to talk in part about that today. Silver was trading around $27 an ounce last week, 74% rise from a year ago when the spot price was around $15.50 per ounce. I know a lot of you guys got silver at that price point as well. A lot of you guys got it down when it was 12, 13. Great job. Gold prices have risen 6.4% in a year. So you guys, you really did a good job last year. So again, I believe it's TJ's hand. So TJ, let's get you insured. Okay, get that body part insured there. So it's often overlooked again. I think we kind of read this here. But demand for precious metals has shot up in the past 12 months. Silver was trading around 27. Okay, we kind of read that. Silver is used in electronics, to photography, jewelry, and coins. Silver is integral to numerous everyday products. And again, don't forget the medical applications. Okay, medical, it's high electrical conductivity and durability, gives it industrial and technology or technological applications with almost every computer, mobile phone, automobile, and appliance containing silver, according to the Silver Institute. The association's data has shown there has been more demand than supply of the semi-precious metals so far in 2021. This is something that often happens. If you ever look at that chart, you're going to see quite a number of years where there's been a deficit in silver, according to the Silver Institute. But Ole Hansen, head of commodity strategy at Saxo Bank, told CNBC that although around 50% of the demand for silver was industrial, the rest came from investors. The rest came from you. Some came from me. But I tell you, we are a company that does have global clients, and I can tell you, people from all over the world piled into silver, and they continue to do so. But still, its uses in industry was one of the main reasons driving its recent rise in value. He said, "This is still true, but I'm always wondering here, what's going to happen when that day comes where investors are fighting with the industrial side, the commercial side for silver? Because as I've said, there have been a lot of people moving into silver, so that's going to be interesting to see how it unfolds. So industrial demand is probably the main reason why we've seen silver outperform gold as it has over the last year. Part of that rise is definitely coming from industrial metals, which have really been on a tear. If you look at copper prices, they've more than doubled since hitting a low point last year. That is true, but I think, despite the good words, I think they're being a little bit disingenuous because my take on it is a lot of the shift or demand from silver is really coming from retail side. Why they would not want to say investors really have or are the cause for silver really coming up the way it has, I don't know why they didn't do that. I'm seeing something different from what CNBC is seeing. So anyway, moving on, Patrick Karim, past guest. What if we ended up with global hyperinflation where all fiat currencies die and you cannot even buy 1 gram of gold? That's a pretty good point. The two sides of this, supply and demand, you may not, let's say, as Patrick says, what if you can't even buy 1 gram of gold where fiat is not accepted anymore? Or on the other side, what if at any price you can't get that silver or you cannot get that gold? So there's two sides to what he's saying, and a lot of people have also said this before. The silver shell game, there is a movement going on, a petition to remove CFTC chairman Rostin Benham, famous for saying they tamped down the silver prices, and that made a lot of people unhappy. So now there's a petition going on to move Rostin Benham out of his position. Max Kaiser, whatever antipsychotics Elon is taking, he needs to up his dosage. His mom, Elon's mom, is worried. Why is Elon's mom worried, according to Max Kaiser? Well, Tesla has suspended vehicle purchases using Bitcoin. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe it has a promising future, but this cannot come at a great cost to the environment. Tesla will not be selling any Bitcoin. He's a hodler, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We're also looking at other cryptocurrencies that use less than 1% of Bitcoin's energy transactions. So that kind of sparked a little fury. This is kind of what Steve St. Angelo was talking about as well. So a lot of different viewpoints on Bitcoin here. Um, Stay-at-home stocks. Let's see what else is out here. Inflation expectations. Well, they're rising. Without question, they are rising, and we'll get into that. This is interesting here. Google searches for inflation in the U.S., which is why we are going to talk about inflation and what the Fed is telling us, because it's on your mind. Google searches for inflation are on the rise. A lot of people are hearing inflation. They're trying to understand it. They're trying to understand why. And depending on where you're getting your news, you're either concerned or not concerned about it. So, again, this is why we are going to be taking a look at inflation. So, that was Twitter. That was Twitter. And then we're going to be moving on to our topic of the day. But I want to just take a quick look at what the conversations are out there. Let me see here. Okay. Let's see. At Martin Rev, unfortunately, no ETA. Yeah, I saw those messages coming in. We did have a pretty fairly large order that we had come in for a nickel in the 250 kilogram drums, and it was gobbled up pretty quick. I'm not trying to be a car salesman here. I'm just saying that the demand for nickel is that great right now. We're really seeing it move. And again, we sell it in 250 kilogram drums, which we're going to have to reorder, and we sell it in 2-ton bags. So there is still a way to get it. So Vincent, thanks for that info there. Let's see. Okay, moving on, looking at some of these comments out here. Let's see. Fat vegan. Remember the Deutschmark from Weimar Germany was actually going up in value compared to gold and silver before hyperinflation. And that's a great point. And the funny thing was when that CPI came out, it was higher than expected, and just about right after we saw gold and silver go down, we saw the dollar on the DXY go up, and I you're kind of scratching your head at that point. With inflation going up, your dollar purchasing power is supposed to be getting weaker, yet it got stronger on the DXY, and things like gold and silver should be getting stronger, but they went down. So it's kind of odd when we saw these things happen, and which in part is why we are moving on to our topic of the day, which is going to be inflation and is the Fed and now the Treasury, two Fed heads basically. Are are they believable? And if you follow this live stream, you know that I do have a tendency to call Jerome Powell and Janet Yellen the Wonder Twins. They kind of seem like the Wonder Twins where they're out there trying to use some magical powers to fix and save and shape the world according to how they want. Anyway, nonetheless, inflation. Some of us see it. I know I do. I'm pretty sure you do as well. But the Fed is not some of us. The Fed, it's not some of us. It's not none of us, and they don't see it. They really don't see it, and or maybe they don't want to see it, or we'll try to convince you and me things like tofu is the best tasting food on planet Earth. Fed is always trying to convince us things, so they may as well convince us tofu is the best tasting food on planet Earth. No offense to you tofu lovers out there, but hey, put some ketchup, maybe some chili sauce, some soy sauce on it, garlic salt, green onions. It just might be okay, but maybe not. But with that small opening rant out of the way, I was forwarded an email from Simon Black that went something like this. He had said inflation is already here. As Warren Buffett told investors only days ago, we are seeing very substantial inflation. Plenty of companies have already announced price increases to their consumers. Procter and Gamble, for instance, announced price hikes across the board on just about everything from diapers to beauty creams. Hershey's announced in February that it would be raising prices. Food giant General Mills complained in February about a higher inflationary environment and input cost pressures due to rising commodity prices. Clorox, Shake Shack, Kimberly Clark, Whirlpool, Hormel, and Coca-Cola are among the many companies that have also announced price increases. And according to the Bank of America Global Research, the number of mentions of inflation on corporate earnings calls has increased some 800% compared to last year. Inflation is clearly a concern of the largest companies in the world. Investors are worried. Consumers can see it. It's not some wild conspiracy. Inflation is real. It's happening, and most likely due to these three key drivers: capacity constraints, the pandemic, however you look at it, and money printing. So, what do you think about what's what that email was just saying? That it's already here, and it's strange that even CEOs are telling us they're going to raise prices on things, and yet the Fed is saying, "Hey, no worries, it's transitory. It'll pass. Don't get too worried about things." Um, Curious what you folks see on this. I see some guys talking about the Big Mac index. Okay, yeah, Big Mac index. That's pretty interesting. We did take a look at it, but not sure if McD burgers elsewhere, but in Singapore, the double cheeseburgers are tiny. So maybe we're getting some shrinkflation. Was shocked the last time I bought one. So that's my colleague Vincent. But I think when I looked at the Big Mac index as it pertains to Singapore, it was a bit off. I forget if it was up or down, but I knew it wasn't. I know it wasn't correct. I had to explore and I had to investigate. So I went to McDonald's and had a Big Mac for company purposes. So it was something that I took a look at for the good of the company and for us as well. So moving on. Hey, inflation is trending, but certain people will say it's transitory and a trend that will end. Now, if you follow this live stream, we've long said that once you put that punch bowl out for Main Street or helicopter money, You cannot take that public entitlement back. And it has sort of become a public entitlement. Nothing against the people. It's just things that the governments and central banks are doing. It has a consequence. It has a consequence. And we know this simply by looking at Wall Street. You try to pull that punch bowl away from Wall Street, you can't. You just can't. So let's dive in and take a look at a recent Janet Yellen Q&A.
Thanks, Jen. Madam Secretary, what's your advice then to the employers who say they are having difficulty hiring workers? One suggestion has been made to perhaps raise wages, but if businesses have to compete with plussed up unemployment benefits, won't that result in an increase in consumer prices and touch off an inflationary cycle that so many experts have been worried about?
Well, I really doubt that we're going to see an inflationary cycle, although I will say that all the economists in the administration are watching that very closely. As my colleagues have said, the CEA put out a blog post on this. We expect somewhat higher inflation over the next several months for a variety of essentially technical reasons because of something called base effects that in year-over-year comparisons right now, the months in which prices fell the most are moving out of the average, and that leaves us with the months in which they were rebounding toward more normal levels. But that's a transitory thing, not something that's associated with a buildup in wage pressures.
Okay. Janet, you purple virtual signaler silver fox. Try and say that 5 times real quick. Purple virtual signaler silver fox. Anyway, if you're going to give people more money to stay at home than work, what do you think people are going to do? Shouldn't be a surprise. It should be something that or is this something that you had in the works for quite some time? Anyway. So it should not be surprised that people will opt to stay home instead of going back to work. But also keep in mind, jobs, they are going to be tougher and tougher to find. So, on top of that, businesses that made it through COVID, they're still having a hard time. Some, it's even continuing to still die off. A lot of bankruptcy still going on. But it's kind of ironic now that the shot in the arm that businesses are looking to get come from the shot in the arm your government and your central banks are pushing you to get. And if they want people to get off the dole and back to work, businesses are going to have to pay them more than what they can get by staying at home. So they're going to have to offer more money competing against the government. And the shot in the arm the economy or businesses are looking to get, it's that same shot in the arm that government is trying to get you to take as well. So it all depends on how you look at the situation. But, there's almost like some type of correlation here that's going to go on that we're going to see in the future ahead. Another clip from Janet Yellen.
I mean, with respect to wages, the best data that we have suggests that wage growth has really not picked up meaningfully. And in areas where you do see some pickup, for example, this month in services, there was a pickup in wages. But still, that's an area where wages actually fell at the beginning of the pandemic. And, we're seeing a revival, not back yet up to normal levels. So, in areas where wages are more flexible, they fell a fair amount. As the economy revives, we expect to see a return to more normal levels. But I don't think we're seeing meaningful upward pressure throughout much of the economy, but we'll watch that very carefully.
Not seeing upward pressure, and we'll watch it closely. In other words, nope, sorry, I just don't see that. Inflation was how I read it. So guys, help me here. Why isn't the Fed seeing inflation? I mean, forget the, we don't count food and energy metric that they use for the CPI. I think you folks are seeing it, right? Are you guys seeing that inflation? We always hear about homes. Homes are just ballistic. I mean, homes are crazy right now. lumber to build homes. I understand even fuel prices are going up. Food prices are going up. Even had a tweet the other week from Peter Schiff saying, if you can't get gold or silver, things like that, get yourself some food. So, I'm curious what you guys are seeing wherever you might live, and that leads me to this article from Zero Hedge. Bear with the advertisements. Everybody seems to have a lot of advertisements nowadays. Um, Let me get down here. So, should we fear? Should we fear inflation is here? So, this is an article from Zero Hedge. It's becoming hard to ignore inflationary pressures, whether one is a central banker or not. Tech investors are taking notice with Monday's NASDAQ 100 slump, the largest since mid March. This article came from last week, Tuesday, May 11. While China's producer prices accelerated overnight, VIX futures are higher with broad risk aversion, setting up for European equities to catch up to the late downbeat U.S. session. At least investor jitters that rising inflation could lift bond yields and sap equities appeal could take comfort from real yields. The 10-year U.S. inflation adjusted benchmark tumbled to 3-month lows, keeping nominal yields in check as break evens jumped to multi year highs. Let me see whatever I can close from here. Jeez. Okay. So let me just kind of get to the meat here. Fed or financial conditions reached another record while evidence of stocks rotation remains. S&P 500 energy and financials advanced over the past 5 sessions. Value is outperforming growth, particularly in Europe, and the RTY NDX is well steady, much like 10-year nominal yields around 1.6. So here's the meat of it right here. U.S. labor market frictions look to be adding to inflation fears, with JOLTS data, a leading indicator of hiring, likely to signal workers' growing pricing power. And the NIFB small business optimism will be watched today for supply side. Again, this was last week. Supply side constraints, last month job openings that were hard to fill reached at least a 4-decade high. Of course, labor market dislocations remain, and a handful of Fed speakers today will no doubt look to assuage inflation fears and discount near-term tapering risks, not like Bill Dudley. Not like Bill Dudley. So let's see what Bill Dudley had to say. He was I believe he was a former New York Fed president, Bill Dudley. So, again, New York Fed head Bill Dudley. I'm going to share with you something that he said a few months back, because it's playing a different tune than what we're hearing once again. So here's Bill Dudley.
If the vaccine dissemination works, we're going to see a very strong recovery in the second half of the year. And I think we're going to see pressure on resources faster than what people anticipate. I understand why the Fed's doing what they're doing. I mean, they don't want to prematurely change expectations about future monetary policy and thereby tighten financial market conditions. But we have to recognize that if they're successful, they are going to have to change, and financial conditions are going to have to tighten.
There's any number of ways to go here, Bill Dudley, but I think the heart of it is a broad public that looks at the fact of inflation is seen in their monthly payments. I would note, folks, rents down lower here in the last inflation report. And Bill Dudley, pros like you looking at the expectation of the expectations of inflation. What are we expecting right now?
What's been interesting over the last 3 months or so is that inflation expectations, if you look at the spread between 10-year Treasury note yields and 10-year tip yields, that's gone up by 0.5 percentage point. The 10-year break even now is running 2.2%. That's not really very far away from the Fed's long-term target. So, the argument that we had to keep monetary policy easy to support inflation expectations, that seems to already have been mostly accomplished.
Seems to mostly have been accomplished. Interesting coming from Bill Dudley. But two interesting things here for you open-minded people. Does it seem like the rush to get vaccinated is also to get you back to work? I mean, I guess it does kind of make sense if businesses want to reopen and all of these things, there are going to be some requirements, I guess, for this to happen. Like I said, a shot in the arm for you is a shot in the arm businesses are looking for. So second, Dudley, the former New York Fed head, hitting that the Fed may have to raise rates sooner than they are letting you and I in on. Now, what would cause the Fed to want to raise rates sooner than expected? Why would the Feds why would the Fed have to raise rates sooner than they wanted to? I'll let you folks figure that one out. One more clip from Bill Dudley.
You've lived and breathed this, though, Bill. Would you look at that as a market pricing in the risk of more inflation or actually pricing in inflation? Do you see that as the outlook for inflation or just the market pricing in the risk of it?
It's the outlook. I think it's the outlook because this is about what's going to happen over the next 10 years. I mean, I think people recognize that the Fed is all in. They're going to be very accommodative. The new monetary policy regime means that they're going to push inflation above 2%. People find that credible, and Chair Powell is reinforcing that through his statements. And so essentially the Fed is accomplishing its mission of keeping inflation expectations well anchored around 2%.
So, Bill, what I need to understand is what they'd respond to. So, as you remember, Governor King over at the Bank of England, we had inflation north of 5% in 2011. We had it north of 3% under Governor Carney in 2018. They looked through it. They used that word transitory. But what's the kind of situation you think the Fed responds to and the kind of situation they look through, so to speak?
Well, I think they'll look through it if there's a little bit of a bubble of inflation, in the second half of the year, just because you have a surge in activity and, prices go up in some service areas. I think they'd look through that. I think what they're going to watch is the labor market. I mean, at the end of the day, inflation is about pressure on resources. And so I think they'll watch the labor market. I think the thing that's different about this expansion compared to the one following the great financial crisis is households have a lot more ability to spend and businesses have a lot more ability to spend. You don't have the kind of overhang of mortgage debt that you had following the great financial crisis. You don't have so I think that the economy could bounce back much faster than people anticipate. Chair Powell is absolutely right. There are about 10 million people out of a job. And so the unemployment rate understates the amount of slack in the labor market. But at the same time, if we actually do conquer the pandemic and allow opening up and getting people back to work, this could be a bounce much faster than people anticipate.
Okay, so exactly as we kind of been saying here, shot in the arm businesses need going to come from the shot in the arm that we're being asked to take. So it's I don't know. I mean, you gotta definitely some tie-ins going on, right? Anyway, inflation. The outlook is for inflation, but did he say the outlook for the next 10 years? I mean, did you folks hear that? He said the outlook for inflation. It's the next 10 years. So kind of makes you wonder about this whole transitory thing, because it surely doesn't sound transitory if former Fed president from New York Fed is saying, it's the outlook for the next 10 years. So funny thing is, though, if we are getting the inflation the Fed wants us to get, why then are they telling us we basically are not getting it? And don't worry, right? So aside from policy, politics, and everything else, what we are seeing is a central bank that is unfortunately, seemingly looking like it's becoming less and less credible. Now, I understand some guys feel they're doing exactly what they need to do, and I get it. They're trying to keep the economy alive. I get it. But there are going to be some consequences with it. So, it's a tough deal. I mean, if the Fed does something, there's going to be consequences. If the Fed doesn't do anything, there are surely going to be consequences as well. So no matter what, there are going to be consequences. And again, these are reasons why we want to be looking at stores of value, especially when the consequence may deal with the money that you are saving or the currency you're saving. So what are people outside of the central banks, outside of narrative news channels, what are they saying? Well, firstly, the market seems to be at odds. So this report coming out from Reuters, or article coming out from Reuters on May 11th, 2021. Okay, let's see if this ad will move. Okay, May 11th, 2021. Market at odds with Fed as inflation expectations hit 10-year highs. And funny how Mr. Dudley says outlook for inflation is also 10 years. He's looking at basically he sees it for a long while. U.S. inflation expectations have surged to the highest in a decade as the economy reopens from the virus-related shutdowns, putting investors at odds with the Federal Reserve, which sees price pressures still far from its target. Let me close this up here. So the jump comes at the same time Let me start from the top. Inflation expectations as measured by break-evens on Treasury inflation-protected securities, or TIPS as it's known, over the coming 5 years jumped to a 10-year high of 2.73% on Monday. This is last week. The jump comes at the same time the Fed policymakers talked down inflation expectations, saying near-term inflation will be transitory and that there are challenges in reaching their average target of 2% on an ongoing basis. And we know we've kind of went over that 2% now with the latest CPI numbers coming in. Prices of commodities, houses, and other goods and services are jumping as the government increases fiscal spending, while the Fed also maintains low rates and unprecedented bond purchases. As the economy reopens, investors are also pondering whether the Fed will be able to or will be too slow in reacting to price increases, or if the market has gotten ahead of itself in pricing them in. At a certain point, if inflation is high enough for long term or long enough, it is not really transitory anymore, and the market is picking up on that. And there is a general sense we are waiting for the Fed to weigh in on that as well, says Tom Simons, a money market economist at Jefferies, New York. But analysts at our favorite BlackRock Investment Institute said the divergence in views likely comes from markets pricing for faster growth longer than it is likely to be sustained. Investors may be over extrapolating from the near term growth data amid the powerful economic restart, they said, or last week. We view the COVID shock as more akin to a natural disaster followed by a rapid restart instead of a traditional business cycle recession followed by recovery. That implies the huge near term growth spurt will be transitory. Okay, so transitory still. And for small businesses who are dealing with the Main Street punch bowl, it may not be just issues of supply and demand. It's also that they're competing with the government, as you mentioned, competing with the government where government wages a person is getting is more than if they were to go back to work. And so small businesses are having a hard time trying to get people in as well. So let's take a look at this article where some companies are blaming stimulus benefits for their hiring struggles, saying workers can earn more money on unemployment. Stimulus checks and enhanced unemployment benefits are making it harder for companies to hire. Why work when you can get more staying home, said a McDonald's franchise. Hiring for some unskilled jobs was difficult pre-pandemic and could get worse in the coming years. And let's just get to it here. Companies are struggling to hire. In March, Congress passed a stimulus package that included up to $1,400 in direct payments for individuals. Package also included weekly payments of $300 in federal unemployment aid through September, in addition to unemployment benefits paid out by states. The biggest challenge out there is the federal government and the state government are going to continue with this unemployment. Okay, they're going to continue with it, and that is truly creating incentive to not work right now. Sorry, guys, let me just make this bigger. So that is truly creating an incentive to not work right now, and this also is going to be an issue that we're going to have to deal with. So, what are some other business leaders saying about Fed speak regarding inflation? It's just transitory, right? Well, Mark Mobius says from Yahoo Finance, the world's largest money managers may be underestimating the durability of inflation after a record wave of money printing to combat the COVID-19 pandemic. This will pose a particular problem in the U.S., where a rising inflation rate will weigh on the global reserve currency. We have Energizer CEO Mark Levine. As we look forward to the future, we don't believe that these costs are transitory and have initiated productivity and revenue management efforts to offset them. That runs contrary to what the Fed stated in its newest policy declaration at the end of April. Inflation has risen, largely reflecting transitory factors. And then we have Thomas H. Key Jr., President and Chief Executive of Stock Traders Daily, says inflation is the worst case scenario for the ticking time bomb market full of complacent investors. Why are they complacent? Well, perhaps because the Fed has just continually been pushing markets up. People have got complacent. They just don't see markets going down. Now, arguably, the only reason stimulus has even been possible is because there has been no inflation. If inflation comes back, all of the safeguards investors have been given, free money stimulus, will be dissolved and won't be able to come back to save the day. Investors are disregarding the fact that stocks are very expensive right now. Okay. And then there's Stan Druckenmiller, who had a recent interview on CNBC. I think we're going to have 5 clips from Stan, and we'll go over it. So hang in there. Should be interesting things that Stan has to say.
Stan Druckenmiller, CEO of Duquesne Family Office. Stan just wrote a new op-ed in the Wall Street Journal. In his words, the Fed playing with fire, clinging to an emergency policy after the emergency has passed. Chairman Powell courting asset bubbles. And Stan, in the past, you have pointed out that the Fed has stayed a little bit too long, I think after the financial crisis, with emergency accommodation. But you seem to have taken your criticism up to a new level, to the point of, if you combine fiscal policy that we're seeing with the monetary policy, it's the scariest combination in the post-World War II period, in your view?
Certainly the most radical policy by a long shot that I've ever seen relative to the economic circumstances. Let's not forget that Ben Bernanke at the peak was doing $85 billion a month. We are now back to normalization on GDP. We're above trend on retail sales. Funny, last year at the Economics Club, around this time, I said that a V recovery was a fantasy. I couldn't have been more wrong, but this is all about risk reward. I understand why the Fed and Congress did what they did at the time. I think it was the right decision on a risk reward basis. But when the facts change, you have to change. And the facts have changed dramatically since then. And yes, I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances. Not one.
Okay, Stan Druckenmiller. I'll make sure not to. I know what you guys are saying out there. It says he cannot find a time in history where monetary and fiscal policy has been so out of touch. Coming from Stan, that's quite the word, quite the statement. Is the Fed overstaying? Is the Fed overstaying their welcome? Has their meddling prolonged and endangered markets and even the U.S. dollar at this point? And perhaps the Fed did do the right thing, although is the Fed now doing the wrong thing? So another clip from Stan Druckenmiller.
Stan, you talk about how quickly the job market has come back. And you pointed out retail sales, a lot of other things that are almost pre-pandemic levels. And in normal situations, you might think that the Fed would be talking about an interest rate hike right now. And you point out it's 32 months. The other statistic that I saw you point out was, and I don't have it right here, but the amount of asset purchases that the Fed has orchestrated just in a very brief period of time, it eclipses what we did through the whole financial crisis for the 7-8 years after the financial crisis. What is that number?
In 6 weeks last spring, we did more QE, more purchase of treasuries than we did the entire time, the 9-year period from 2009 to 2018. Frankly, Joe, I don't have a problem with that. We were in a black hole. No one knew where we were headed. What I have a problem with is the Fed is expected to do $2.5 trillion of QE after vaccine confirmation and after retail sales reach trend and we're above trend. So the black hole didn't occur. That's wonderful. We're all happy, but we're still acting like we're in a black hole. And in fact, the economy accelerating. Could your producers bring up the chart of retail sales? Is that possible?
Yep, I think we've got them already that we can bring up there.
That's the third chart.
There it is. I think it's up now. U.S. nominal retail sales.
Okay, so if you look at this, this is a chart of retail sales the last 20 years. And as you can see, they grow about 3% a year. And after the great financial crisis, it took about 6 years to get back to trend. If you look at the current recession, it's like nothing we've ever seen. A sharper decline, but then within 6 months, you were back to trend level. And you see check one, that's the first stimulus package. That's the one I have no problem with. I think it was the right risk reward, which was right at the bottom. But look at check two and check three when they're coming. Not only are we back to trend, we're now 15% above trend. To put that in perspective, retail sales grow at about 3% a year. So we are 5 years worth of demand above trends. There's some pull forward here away from travel, but it's not 15%. So when you look at this chart, and then you look at the Fed policy and all the stimulus and them talking about the hole we're in, I just think it's totally inappropriate.
Inappropriate. Wasn't that chart pretty telling? I mean, what the Fed did in 6 weeks eclipsed more Treasury purchases than the QE and QE than the entire 9 years of 2009 to 2018. Never mind the typo here. We're not in the year 2018. The Fed is still expecting to do a $2.5 trillion more after vaccines and the normalization or retail sales. Excuse me. We are 15% above nominal retail sales. Why is the Fed still pumping the market? Why is the Fed still pumping the market and not tightening? I mean, you saw that chart. There was that dip and it straight away came back up, moved even higher. So why is the Fed still pumping the market and not tightening it? Anyways, two more clips on Stan Druckenmiller. Well, three more actually. Here we go.
Let's talk about the dollar. And 85% of the transactions are still done in the dollar. You pointed out in a recent speech that you think we've crossed the Rubicon. Are you comfortable saying what you said there, that for the first time in your career, you think we lose reserve status at some point?
I'm comfortable with it. That's my central case. As you know, Joe, I can change my mind. But yeah, you said that to some extent, the Fed is enabling the fiscal transfers. It's not to some extent. They couldn't be doing this without the Fed. The Fed is monetizing their activity. I mentioned all the QE after vaccine confirmation and retail sales. We've had $850 billion of direct transfers. $575 billion of them came after retail sales were above trend. 575 of the 850 billion. I'm old enough to remember the bond market vigilantes. I used to be one of them. Without the Fed buying, I don't know what the exact number is. I think it's 60% of all the debt issued. The bond markets would be totally rejecting this. So they are enabling this massive expansion in fiscal policy. And the problem is, if you end up getting inflation, and frankly, even if you don't, the debt is going to be so big. You remember I did my entitlement talks 8 or 9 years ago. That's all happened except for one thing, the interest rate level. So we're right now in the crux of when the baby boomers accelerate in terms of getting Medicare, Medicaid, Social Security, that stuff. Right as we're doing that, we just put $6 trillion of new debt on. Again, all enabled by the Fed. These guys could not be doing it. Bond rates would go to a prohibitive level.
Yes, I do take sips of water, and yes, I do take them when these clips are playing. Anyway, inflation or no inflation, go beyond it, and you're going to realize the debt is so big, and the Fed is continuing to monetize debt almost unabatedly. We're going to pay for this, if not with Fed fiat, we are going to pay for this. We are going to pay for it with freedoms, liberties, regulations, taxes, government reaching into your pockets, and perhaps even the loss of the US dollar as the world's reserve currency. This is how severe it's getting. And if the dollar loses that status, I'd imagine all of the above will accelerate before the demise of the dollar heads into full swing. Another clip from Stan. Oh, excuse me. This is where I should talk to you folks a bit more. Okay, so let me take a look at a few more of your comments. Caught me off guard there, huh? But I mean, getting that back to the point, if let's say the US dollar is no longer the reserve currency, or let's put it in let's look at it another way. If a country is on the rise and looks to be a dominant country, can that country really lead the world, or be that top leader if someone else's currency is the reserve currency? So why don't we look at it that way? Can another country rise and be at the top if someone else's currency is the reserve currency? Well, my answer to that would be no. And so when we look at it that way, it's a little bit of a different story. And I think, you know, let's just say reserve currencies, they come and they go. They don't stay there forever. Okay. And it's just a matter of if that reserve currency peacefully, peacefully goes down while another currency comes in and comes up, or if there's a bit of turmoil to that reserve currency losing its power. I mean, like I say, reserve currencies, they don't stay there forever. So we are going to have a little bit of a shift with that. So again, let's just see what happens. Again, reasons to buy gold and silver.
So my issue here is, in the future, as we go forward, if you look at, do you have chart 5 up there?
Let's get it. I think we can do it. Which one?
It's federal spending, Social Security and major healthcare programs. Federal spending is a percent of GDP. This is the CBO. This is not me. Okay, and they're saying if 10 years go to 4.9%, which is their normalized projection, the interest expense alone will be close to 30% of GDP every year. That's basically what we just spent on the COVID emergency in the last year. There is no way we can afford to have 30% of all government outlays be toward interest expense. So what will happen is the Fed will have to monetize that. When they monetize it, I believe it'll have horrible implications for the dollar. And that's why I said in that speech, yes, that I think it's more likely than not within 15 years we lose reserve currency status.
Okay, so if the 10-year goes back to a normal 4.9%, the interest expense alone will be 30% of the GDP, and that can't happen. We cannot afford that. The Fed will monetize it, and this will bring implications of within 15 years, the U.S. dollar losing world reserve currency status. And again, so sometimes you got to kind of wonder, is maybe, is it kind of anchoring us from going forward, the system that we are in right now with the reserve currency that is often weaponized? We're seeing it being inflated. We're just not taking care of it. We just aren't taking care of the privilege of having that world reserve currency. And it's understandable. The world may be getting tired of it. I mean, even, the citizens of the reserve that use that reserve currency, they seem to be getting kind of tired of it as well. So moving forward, it's going to be interesting. And it is a whole nother ballgame because inflation, monetizing debt, decades of out of control spending are coming to head where U.S. central banks, U.S. politicians, they may lose the USD's currency or reserve currency status, right? And again, my question, let me just say this: can another country, or can the world move on? But let me back up a bit. Can another country become a global leader if, let's just say, other than gold, their currency is not the reserve currency? So again, it's about a currency shift, new currency, maybe coming in. Maybe it's just, people would rather trade in something else that is often weaponized, that is being overprinted, that can lead to inflation, things like that. And it's fair to say. So, to expand, if the USD is not the world's reserve currency, do you think the US will still be on top? Do you think the US will still be on top if its currency is no longer the world reserve currency? And this is how big the deal is right now. So think about it. Right now, either the Fed and US politicians are trying to make America great again, or knowingly, willfully destroying it economically without really you knowing it. And in fact, we're cheering for them because we're getting all this free stuff to stay home and not go to work. And in the process, hey, they may be positioning themselves for personal gains whenever this power shift happens. I mean, guys, it's nothing new. Throughout history, you can see this over and over and over again. Don't take any offense to it. Just saying that history is rhyming and repeating. And again, this is something that we really, really have to watch. And this is why you out there need to position yourself to economically, financially, to make it through and take advantage of every opportunity you can find, including having stores of wealth like gold, like silver, to protect your financial legacy, your generational wealth. Okay, this is why it's critically important. Last clip from Stan Druckenmiller.
Can we go to the chart on the dollar specifically? Because I think this is really important. Last spring, in the midst of an equity market meltdown, and I've been trading for 40 years and I've never seen anything like this. Right in the middle of an equity market meltdown, the bond market went down 18 points one day. And everybody thought it was macro traders like me and others that were rejecting the implications of the CARES Act. The Fed did a deep dive, and by hindsight, foreigners sold $1 trillion, of treasuries overnight as we were proposing the CARES Act. They've continued to sell treasuries ever since then. Why is that important? Because for 20 years, treasuries have been the go-to asset of foreigners to hedge global portfolios with. In every case, whenever you had a problem in the equity market or in the world economy, they fled to treasuries and they fled to the dollar. Last spring, that was violated. So since then, they've continued to sell treasuries. So what we've gone from is for 20 years, an average flow of $500 billion a year into treasuries from an outflow out of treasuries. So when you have a $700 billion current account deficit, our estimate for the year, you need capital to flow in to offset that. If you just erase 500 billion inflow and turn it into an outflow, you see the pressure will put on the dollar. A reasonable person might ask, well, if that's true, why did the dollar not go down from March to July? Very simple. Who was the biggest beneficiary of COVID? Obviously, the massive digital transformation companies, Google, Microsoft, not so massive, but Zoom, those kind of names. What country dominated in terms of those names? The United States of America. So the $500 billion outflow out of bonds was offset by a massive inflow from world central banks, from sovereign wealth funds into our equity market. By July, that had become pretty much in the market. The relative prices had gone up. And frankly, the vaccine profile was starting to look better. So that is when the dollar peaked, as that offset started to diminish. And as you know, Joe, the vaccine tends to cause a rotation out of growth stocks into value stocks. Our big advantage over here are the growth stocks. So that's why I think the pressure on the dollar is going to continue.
Okay, treasuries are being sold. This is huge. Okay, for 20 years, foreigners have used treasuries to hedge global portfolios. Okay, when trouble in equities markets happened, they fled to bonds. They fled to the U.S. dollar. Not doing it anymore, right? With big tech names, Druckenmiller threw around Google and so on. You got to ask this question as well now, okay? Does big tech now have the power to rule over and decide a nation's politicians? He maybe even said policy, maybe even they are true governments. Who knows? We saw people get deplatformed. We saw cancel culture. We saw big tech promoting who they want through the use of even bots, and maybe fooling us, trying to influence us. Again, we can't hide from this. Okay, we've seen it happen. So much less one day, if not already, control perhaps the entire world if they're already trying to control, let's say, elections by influencing us. We got to keep an eye also on big tech. Big tech is getting bigger and bigger. Only time will tell, which is why we need to be woke and wise. Woke and wise. We got to be it as to the subcurrents moving beneath that we can't see. We can't see, and that our sources of information might not be telling us. Okay, we just might not be hearing everything that we need to hear. And at this time, daddy may not be around to make things right and fix things, according to an article again on Zero Hedge. Daddy's not coming home to fix this. But again, what Druckenmiller said about is selling the treasuries and that's pretty significant. Something we need to excuse me, keep in mind. Anyway, Daddy's not coming home to fix this. John Rubino fears Mad Max scenario. We hear this quite often, right? No, I don't want to watch this. Okay. So Rubino starts with the economic problem and explains now inflation is starting to spread. Look at lumber. If you're trying to build a house, it's $35,000 more than or more now than it was 2 years ago just because of lumber. Iron ore, house prices, grains, food, and you name it. We've got inflation going on. And as I showed you at the beginning of the show, or more in the front of the show, CEOs are saying they are going to have to raise prices. At the same time, we have an apparent labor shortage. All these companies are coming out and saying we would love to take on all the business we are being offered to us, but we don't have enough people. Even Uber, Lyft cannot find enough drivers. It's weird. It is happening this soon, but we should not be surprised since we dumped tens of trillions of dollars into the economy over the past year. And this is what you would expect if you get the money supply going up 30 or 40%, which it did. This is what you get. The economy overheats, and now we are confronted with the nightmare scenario in a fiat currency system. Inflation starts to pick up, which it is. That sends interest rates higher, which it's going to, or even which it's happening, according to Rubino. And that threatens all the heavily indebted people out there because as rates go up, their costs rise. Then they go bankrupt in increasing numbers and the system collapses. We are already in the early stages in that kind of a process, and I don't think anybody really knows what to do. It seems Sam Zell knows what to do, and we showed clips of him on prior shows. Who is Sam Zell? Rubino says, well, Sam Zell is one of the biggest real estate investors in the world. The guy has a history of being right at the big turning points. He will build massive commercial real estate empires with billions and billions of dollars of offices and shopping malls and stuff like that. Then towards the end of the cycle, he starts selling. He will basically get out at the peak of the market. Then the markets tank and he buys back in. So he's a really good indicator of where the economy is going because he has such a history of being right. So now the guy is buying gold. Okay, so now the guy is buying gold. So I think we kind of get the rest of the gist of this, but I'll just finish up here. I think this is the first time I've ever heard of him doing that. He usually just sells his real estate and goes to cash. Now he's selling out of some of his real estate, and instead of putting it into a bank, he's buying gold with it. This is a good sign from a smart guy. This guy is right so frequently. The fact that he is buying gold is a really good gold buying signal. Okay, and that pretty much is going to conclude the topic of the day. But I just want to ask you folks, really, with everything presented here, with what Druckenmiller is saying, what even the Fed is telling us, it's important that we really try and take in all sides. I mean, again, the left-right thing has not really died down much, but the thing is, you got to be able to take in information that you like and information even that you don't like. Okay, so we got to be able to do this. Let me take a look at a few more comments here. I do have a little bit more going on. In fact, maybe I should get to it real quick. But anyway, that's it for the main topic. So we'll conclude that. We'll get into, I just quickly go into the commentary. You don't need my commentary. This is the most important, I think, part of what I'm going to show you today. This is coming from Danielle DiMartino Booth. And the first interview I had with her in 2018, I asked her this question. question for the average U.S. citizen or person in the world for that matter. Can we trust the Fed?
I hope so. If Janet Yellen had been reappointed, I would have given you a simple no. Because this is a woman who said, let's use the Federal Reserve meeting minutes as any other tool in our toolbox and manipulate them as we need if the markets did not interpret the Federal Reserve, the FOMC statement correctly. It's on record. And that is something that is by its definition distrustful. Yeah. So I'm hoping that, we've implemented press conferences. I still have pronoun issues. It's as if I'm still inside. The Federal Reserve has implemented press conferences following every meeting, which means that they're starting to grow up and be accountable and make every meeting for taxpayers count. And Jay Powell has, he's gotten rid of forward guidance. He's no longer pre-committing to any policy path. He's truly going to be, I believe, the most data-dependent Federal Reserve chair that we've had in years. There are many things that can be done to fix the Fed. I'm hoping that we can begin to put trust in the Fed. But again, of late, Powell's been sounding rather academic. So I'm a little on alert right now.
Okay, so there you go. A woman who cannot be trusted is the U.S. Treasury Secretary. This according to a woman who has been on the insides of the Fed. So where are we in history, guys? Where are we? Where are we? Where are we? Get yourself some silver and gold, real money. It's not funny money. So again, interesting words that Danielle DiMartino Booth had to say. She knows. She knows. And according to her, we may have someone who's less than trustworthy as the U.S. Treasury Secretary right now. So can we believe everything that the purple silver fox is telling us, right? So anyway, that will pretty much wrap it all up here. I'm glad that we found that clip from Danielle DiMartino Booth. She would know. She would know. Mr. Nguyen, absolutely. She rocks. She knows. American Rebel, wishing and hoping. Absolutely, absolutely. And, again, I appreciate everyone being here. Again, going back to that Danielle DiMartino Booth interview, when she said it back then and what she's saying back then, I really can see it happening today. I think almost pretty much all of you folks can see it as well. No. No. Hey, if we show her, hey, I'm out of a job now. We can't be bringing on hot girls like that. Come on. Nah, just kidding. She's smart. I mean, I admire her work. She does a really great job. So anyway, let's wrap this up. I've got you folks here for an hour and a half already. I thank you all for being here. Enjoy your Sunday night, wherever you may be, probably in the States. Enjoy your Monday morning here in Asia, here in Singapore. Hopefully I'll see you guys at the shop in Singapore. Stop by. But just make sure that remember to be a blessing and not a burden. As I always say, we can really see where things are headed, and we're really going to have to firstly help yourself. Helping yourself helps your family. Helping yourself helps your family, which can help your friends. And if all of us took care of that little circle, then we would be taking care of the bigger, greater circle, which hopefully would be most of us, if not all of us. So just try and remember that. So I'll be ending it here. Again, appreciate you guys all being here. And with that, as always, I'll say saddle up for what's coming ahead and silver up as well. I'll see you guys next week. Take care. Take care, everyone.